Okay, thank you.
Looks like we are live. Again, for all the visitors, if you could mute your phones so we don't have any background noise.
Okay.
Are we good to go?
I think you still got a minute.
Right, Gail, we're ready whenever
Okay.
you are.
Okay.
Ready to go?
Yes, sir.
Okay. I would like to call to order the Finance and Budgeting Committee meeting of Cuyahoga County Council for Monday, June 29th, 2020, and ask the clerk to please call the roll.
Calling the roll, Mr. Miller,
Here.
Mr. Tuma,
Here.
Ms. Simon. Ms. Simon is absent at the moment. Mr. Gallagher,
Here.
Mr. Strawn,
Here.
Ms. Brown. Ms. Brown is absent at the moment. Ms. Baker,
Here.
okay, Ms. Brown. We have a quorum. Also like the record to reflect that Councilman Brady is also in attendance.
Thank you very much. The next item on the agenda is public comment. Do we have anybody signed in or has anybody sent us public comment?
No, Mr. Chair, no one sent any public comment.
Great, thank you. Item number 4 on the agenda is approval of the minutes for June 15th, 2020, which were sent out along with the agenda. Do I have a motion relative to those minutes?
So moves.
Is there a second?
I'll second Nan Baker.
Okay, we have a motion and a second for approval of the minutes for June 15th, 2020. Any further discussion? Hearing none, all those in favor say aye. Aye.
Aye.
Aye.
Any opposed? The ayes have it and the minutes are approved from June 15th, 2020. Legislative matters referred to the committee are none. We have 2 items for discussion, and the first item is item number F from the last fiscal agenda, which is the appropriation of $7,936,194.23 for the Hilton Hotel related to property taxes and debt service. So I would like to call forward Director Chambers and whoever else is presenting on behalf of the administration on this item, please.
Councilman Miller, Walter Partheo, on this one, okay.
Okay,
Mike is also on the line as well, so, I mean, he could add to as he sees fit.
Will do.
As you said, this item is a request for an appropriation increase for property taxes and debt service for the Hilton Hotel. As you know, Cuyahoga County is ultimately the owner of the Hilton Hotel. The hotel has done very well over the last several years. Since opening, we've paid these property taxes and debt service from our hotel operating revenue. This year, the coronavirus has severely impacted operating revenue. Hotel occupancy is an all-time low. Most events have been canceled. Our operating reserve has been funding the hotel operation since April of this year. The reserve is insufficient to cover the property tax payment due August 13th and the debt service payment due December 1st. At this point, I'd like to introduce Larry Trabulsi from CHM Warnick, Chad Crandell, also from CHM Warnick, Terry Augusta from the Hilton Hotel downtown, and Bob Franz also on the line as our financial advisor to explain how we got to this point.
okay, please proceed.
All right, Walter, I'm going to do a share screen if that's okay.
That's fine, sure.
Can everybody see my screen?
Yes,
Good afternoon. My name is Larry Trabulsi. I'm an executive vice president at CHM Warnick. We're a hotel asset management investment advisory firm. And we're going to do a brief overview for you of the hotel, the impact of COVID, where we are right now, and what the outlook looks like going forward. With me here today, to answer any questions you may have, is Chad Crandall. Terry Augusta, who's the general manager of the hotel in Cleveland, is with us as well. And then Bob Franz, who's with Stifel Nicholas, who's advisor to the county, is here as well. Our outline, we'll just do a quick overview of the hotel. We'll talk about the COVID impact with some charts and graphs to show what's going on with the lodging industry overall, what's going on in the Cleveland market, and then also for the hotel specifically. And then we'll talk about a quick outlook as what we see going forward. In terms of the overview of the hotel overall, as Walter mentioned, the county is essentially the owner of the hotel. The hotel is managed by Hilton Management Corporation under the terms of a management agreement, which has a base term of 15 years. A few facts about the hotel, as many of you may know, has 600 guest rooms, 50,000 square feet of meeting space. The hotel was initially funded primarily through an offering of $230 million, and we'll walk through the debt schedules for that in a little bit later on. And the hotel opened in June of 2016, so this would be the fourth full operating year of the hotel. I did want to highlight, coming into this environment, the hotel, and as Walter mentioned, has been highly successful, both financially and also operationally as well. A few of the awards that the hotel has won, and I'll let Terry talk about them later here as well, as in 2018 and 2019, the hotel won what's known as the Connie Award, which is sort of the best in class hotel for full service hotels within Hilton. It's quite an honor to win this award once. It's an even bigger honor to win the hotel twice in 2 years in a row. So that's a major victory for the hotel and for the city of Cleveland. The hotel also in 2019, and this is one of the factors for the Connie Award, is the highest SALT scores. SALT is Hilton's guest service award, or survey results, if you will. So this is what customers were telling Hilton about the hotel and what they liked about their stay. And then lastly, with the hotel's proximity to the stadium, the hotel won the NFL Hotel of the Year. Again, a result of survey meeting planners and team travel agents for all the NFL teams. Quite an honor. Now, in terms of COVID impact, as many of you may have seen, the lodging industry has been absolutely decimated, pick your adjective, by what's going on in the COVID environment. What this chart shows here is the blue bar is RevPAR, which is revenue per available room. Think of it as room revenue, if you will, industry-wide. And during the weeks in March, and we're comparing on a year-over-year basis. So this would be weeks in 2020 compared to weeks in 2019. And if we look back to where we were in late March, RevPAR declined by over 80% compared to the prior year. We have never seen week-over-week declines like this in history. If we think back to the 2001 downturn and the 2008 downturn, they paled in comparison to this downturn. This was totally unprecedented. We'll walk through a little bit more, but you can see since sort of late March, early April, the trend line has gotten a little bit better. If we look at week over week now here, as we get into June, we're down in this, call it the 60-odd% range. And again, this is national industry-wide stats. Some markets performing better than others, and we'll walk through different hotel classes and how they're working. This is showing the same metric, but on a trailing 28-day basis through June 13th. Again, so RevPAR in the US overall is down about 65% compared to last year. What I wanted to show here is, again, it varies. So urban hotels, these are urban downtown hotels, have fared worse. They're down about 80% compared to prior year. Suburban hotels, small towns outside the top 25 markets have fared a little bit better, but are all still negative as well. If we look at the types of hotel, and your Hilton would be classified as an upper upscale hotel. We've seen, again, that luxury and upper upscale hotels have fared worse than the average overall. whereas mid-scale and economy hotels have fared a little bit better than other types of hotels. This is data from Smith Travel Research, which is a national aggregator of lodging data. And again, this is just looking at the month of May. So for the month of May, RevPAR in the US declined by 57%. So again, getting better. We're not down 80 or 90, but still down 57%. However, for the month of May, the Cleveland market, and this is the entire Cleveland market, this isn't just downtown, this is the market overall, was down 61%. So slightly worse than the US average by a couple of points. Now, as we look at, these are stat numbers that relate specifically to the Cleveland Hilton. What we've laid out here is group cancellations, which we track on a weekly basis. The bottom box is where we were back on March 31st. The middle box is where we were as of May 7th. And the top box is where we are now as of June 23rd. What I wanted to highlight here is, back in March when the impact of COVID was just starting to hit, cancellations were primarily within sort of a Q1, Q2 out through June primarily. And so as of the end of March, we had $5 million of cancellations confined really to the March to July timeframe, really March to June, a little bit in July. But as time has gone on and the impact has been fully realized, both the dollar amounts in terms of cancellations, but also the booking window for when groups were canceling began to extend even further into the latter part of the year to the tune of $9 million that came off the books as of May 7th. And now as we sit here in June, we've essentially realized cancellations almost for every month of the year for the balance of the year to a total of $13 million. These patterns and trends we've seen within our portfolio. We asset manage about 12 convention center hotels. The trends that were realized here, we've seen at other hotels as well across different markets. That sort of the initial impact was this Q1, Q2 impact, and now it's extended on to the end of the year at this point in time.
Can you explain what group and local F&B revenue is and how that's different from room revenue?
Yes, so when a group comes to stay in the hotel, they have multiple revenue streams. The first is their room revenue, which is essentially what they're paying to stay overnight in the guest rooms. But the F&B revenue is their banquets and catering revenue. This is their coffee breaks, their dinners, their lunches. So it's the aggregation of that spend. So when a group cancels, it's not just they're canceling the guest rooms, they're canceling the F&B revenue that goes with it as well.
Okay.
May I ask also on that topic, Nan Baker?
Yes, please proceed.
Is the Hilton, thank you. Is the Hilton currently open for business?
Yes, the hotel remained open throughout this. We evaluated several options back in March and April as well, but the hotel did remain open. There were several other hotels that did close downtown. At this point, I believe there are 2 that are still closed.
And to follow up that, this is a cancellation tracker. Were there any reservations that have been made, new reservations, given that we were open and others were closed?
So this is focused solely on the group side. What we have seen over this time is some, first off is what government restrictions are allowed in terms of whether meetings were allowed or not within the municipality and the market.
But you had reservations coming in by the cancellations?
He's frozen right now.
Yeah, we do have what we're calling as rebookings. We do have opportunities to take these cancellations, and that's our #1 priority, and move them into future dates. So originally we moved them into the fall where people were feeling more comfortable, but now the fall bookings are moving into the first and second quarter, and even 22 and 23. Because many of these group bookings have already committed for 21 and 22 because they're known as citywides, and those usually book 2 and 3 years out. But yes, I would say we've successfully rebooked close to half of them into the future years, being 21, 22, and 23.
Dale,
None of the rebooking though were in 2020.
Some of them are, some,
Those were this year.
yes, some of them are the smaller ones. We of course have to follow the governor's guidelines, and we just most recently got released for 300 plus events of 300 more people. So we are seeing a small uptick in weddings and social groups that fall under the 300 mark. But very few for this year. They did originally book in the fall, but now confidence is eroding again, and they are canceling and going into the more 21, 22. Are you back, Larry? I saw a little movement there.
Dale, a question?
Yes,
Yeah, on that, Terry, most of those conventions and bookings are done 2-3 years in advance.
That's correct.
Do they have insurance on any of those, on those events themselves? I mean, if it's a trade association, a lot of times they will buy insurance. I know some events that I'm associated with, we bought insurance years ago. And would we be the beneficiary of those insurance policies?
Good question. This is considered force majeure,
Right.
which basically has all the cancellations with no penalties. So force majeure is continuing to be a part of all these bookings here, which does not allow us to collect any damages. We are, though, mitigating the expenses by rebooking them into the future. A lot of times we'll keep their deposits and rebook them into the future, or we'll definitely be rebooking them wherever we can. We do have a tracking of what we've rebooked and when it rebooks, 21, 22, or 23. But no, insurance does not cover force majeure.
So, but we are determining if this was force majeure, because a lot of the policies and contracts are fuzzy as to whether this is falling into that category or not, because the pandemic was not necessarily considered to be a hurricane or weather related or anything like that. So there was a lot of people pushing back as to whether this falls into that definition. So I didn't know where we stand on that.
Well, we follow what the governor says, and the governor clearly states that there has been no gatherings for over 10 people for quite a long time. So
Right.
that would prevent any bookings there, and now 300. And a lot of these bookings are 1,000, 2,000 people. They're citywide, larger bookings.
Sure. Okay.
Yeah, definitely. These are considered force majeure.
Thank you.
Mhm. Of course, during these times, we've been very, very conscious to be prudent with our operation. We've reduced our operating model. Some of our restaurants are closed or reduced services. We do need to feed our guests. So Elliott's has been open for our airlines. And then as you are familiar, the Noshery, the Grab and Go is open, but the Burnham is closed. We did most recently open Bar 32 Thursday, Friday, and Saturday, and that's been very successful. And that's been part of these green shoots I was telling you about, interest coming back in the hotel. So we do see interest. It's just going to be a much smaller interest than larger groups. It's more local transient, people wanting to get away for a staycation or just a break from being quarantined. We certainly have taken the advice of Warnick and Hilton to create these benchmarks for our hotel operating costs. We compare them to other convention hotels. We compare them to other Hiltons. They are scrutinized by Hilton Corporation, our spending here, and then Warnick, who is hired by the county as the asset manager. So they've been doing quite a job. Everybody's keeping a nice eagle eye on us. Of course, myself, we have guidelines that we, right now we're down to about 50 team members from our original 400. They are all furloughed. And we are looking forward as business. We have different levels of business coming back, and then we bring them back from there. We're still very committed to our second chance programs. We're very committed to the future of our team members and many of our city residents. So we're staying very focused on that. As we spoke about the rebooking, that's another big refocused.
Mr. Chair, this is Councilwoman Brown.
Yes.
Ms. Brown?
Thank you. Terry, along the lines you were talking about the employees, did we make any efforts to secure any of the PPE funding from CARES?
Yes, we did make some efforts. What we are not eligible for the PPE funding. We are supporting their benefits while they are on furlough. And we communicate weekly with all of our team members, and the majority of them are receiving unemployment. So we feel very positive about that, and we will continue to work on transitioning if we rebound enough to welcome them back.
Okay, good. So just so we're clear, the Hilton Hotel was not eligible for the employee funding.
That's
Correct.
Okay.
Thank you.
Chantal, was your question PPE or PPP?
She answered for PPP, but she did say PPE, but I understood.
Okay, I just want to make sure, because I think they would have been eligible for PPE
Right.
because
No,
it's company money. Yes.
Thank you, Councilman Strong. My question was around the employees, which I think Ms. Augusta fully understood and answered. I think we're all in the habit of changing that last letter sometimes. So
Right.
is that accurate?
Yes.
Okay, thank you. Thank you, Councilman. Thank you, Mr. Chair.
So, Ms. Augusta, could you, by follow-up, say a little bit more about why you were not eligible for the employee funds?
Actually, Mike or Walter, did you want to answer that?
500 people. Oops.
I'm sorry, what was that question?
About the PPP.
Yeah,
As to why the hotel was not able to get that employee assistance from the federal government.
the only thing that I'm aware of, Councilman Miller, is that we were allocating a little bit of our COVID money for some improvements over at the hotel. I'm not sure whether that's materialized.
No, that's true, Walter. I think we have about $200,000 that we've received a request for that we're going to keep monitoring. And as they keep rolling out more, we'll decide whether or not we can fund that or not. But as far as the PPP, that's not, I think that's they're a separate entity hiring them. They're not county employees. I don't know exactly why.
The issue ties back to the ownership effect. Yeah, the county is as the owner and the employee count. That's made it ineligible.
Dale, you had to be under 500 employees for the PPP.
Okay, fine.
But the PPE, we would have been eligible for. And for shared work, I believe the county would be able to be applicable for the hotel also. So we should look at shared work on that same vein.
So switching to where we are right now, over the last 3 years, the hotel had funded an operating reserve, which totaled about $4.3 million pre-COVID. We've been working with Terry Hilton and Hilton Corporate in terms of planned withdrawals from that fund. Now, per the terms of the management agreement, property taxes cannot be covered by operating reserve funds. So that's part of why we're here today. And based on where we are right now, we do believe that the operating reserve should be sufficient to carry through the end of 2020. Now, in terms of outlook, on a somewhat positive note, this is data from Smith Travel Research and from the TSA. The blue bar is rooms sold on an aggregate basis across the industry. So you can see, rooms sold in the industry is increasing, albeit slowly. The other piece here, the lighter blue bar, is TSA checkpoints, which ties to air travel. Air travel typically is highly correlated with hotel demand. And so again, we're starting to see some slow recovery in the airports in terms of people going through TSA checkpoints.
Could you go back to that slide for a minute? What is the small pink bars that says ratio?
That's a ratio of, I believe it's the TSA checkpoint 2.4 divided by number of rooms sold. So it's indicative of as travel starts to increase and people are going through the checkpoints, we're starting to see an increase again on the hotel demand.
It also points to the fact that right now, a lot of the travel for hotels is drive-to travel. There's not a lot of folks that are getting on the airplane traveling to a hotel. It's more of a drive-to recovery right now.
Yeah, really good point. Really good point.
The Global Business Travel Association, which is a variety of meeting planners, if you will, or excuse me, corporate bookers for corporate travel, have been surveyed over week over week basis. And what we're starting to see is in surveying of travel professionals that, again, feeling is the worst is behind us at this point. So 86% of folks on the top bar had indicated that, you know, they thought the worst was behind us. These numbers have improved from week over week surveys, but again, it's tough to quantify this to room nights, but at least what people who are coordinating travel for major corporations are saying is we think the worst is behind us. In terms of when travel will recover, majority of respondents, 60% indicated they thought domestic travel would start to recover within 2 to 3 months. International travel, however, may lag longer than that, but at least on the domestic travel side, some, as Terry called them, green shoots, that people are starting to think about coming back to travel. This is a key portion of the business. This is a typically midweek portion of business as well. So getting business travelers coming back is a critical part here to recovering occupancy in the industry.
What's the date of this slide, when this slide was created?
This was last week.
Thank you.
Yep. Again, similar graphs showing, you know, trends over week basis. The green bar is RevPAR. So again, sort of if we're at the lows of 80-odd% a couple weeks ago, we're coming back into the 60% range. You know, the green bar, however, on the right, showing luxury and upper upscale lagging a little bit. And again, that's where a hotel like the Hilton would fall, showing that, you know, these full service hotels having a little bit of a longer road to recovery than some other smaller and select service hotels. Now, periodically, CBRE, which provides their forecast, there's usually 3 main companies that do lodging industry forecasts overall. CBRE is one of them. They came out a few weeks ago with their, I'll call it their most recent, they seem to update them periodically, forecast for the lodging industry overall. And if we look in the middle, you know, for 2019 year end, if we just focus on that RevPAR column, you know, industry-wide RevPAR was $86.64. What they've outlined right now in terms of their recovery is they do not believe that RevPAR industry-wide will recover to 2019 levels until really 2023, 2024-ish at this point. Be looking at a decline of about 52% of RevPAR for this year, you know, on a percentage basis recovering in 2021, but not getting there nominally. And it'll take a few more years to get there. So looking at probably, you know, a 3-year dip here. And again, I think upper upscale and convention hotels maybe on the tail end of this as well, just given that their size and nature of the business they have.
So roughly 4 years before we even get to the same pricing model per room.
Yeah.
We're losing not only the revenue, but we're also losing all the expenses to get there.
Correct.
They're not going to reduce. We're not going to be
Correct.
reducing salaries or anything like that. So it's going to
Correct.
cut indirectly in it. Okay, thank you.
Now, this is a custom forecast report that was prepared for Destination Cleveland, looking out really just over the balance of 2020 and 2021. So again, this is the Cleveland market overall. Somewhat similar trends. They're expecting a decline of 50% this year and a recovery next year. This gives breakouts by month as well. So again, sort of similar trends. Maybe Cleveland's going to be a little bit worse than national trends overall, but fairly close in terms of mirroring. And with that, Bob, let me turn it over to you.
If I may ask a question at this point?
Ms. Baker.
Thank you, Chair. What is the rationale behind not seeing us at least coming back to where we were before the COVID-19 numbers? I mean, if there's a vaccine maybe available first quarter, second quarter of next year, is this based more on a recession that I don't think people will be coming back, or what is the thought that it would take till 2024 to even come back where we were in last year's numbers?
No, I think your point about it, in the event a vaccine were to come out and be readily available, you would likely see, hopefully would see these trend lines improve significantly before that point. That's going to be particularly important, I think, for group hotels and for getting people to be comfortable be coming back and meeting in relatively large numbers.
So what are these numbers based on then? A vaccine not being available and what? I mean, what kind of future are these numbers showing that would create those kind of percentages?
I think you've got a couple of factors. You've got, first is, I think it's trend lines in terms of, you think about the different segments, and I think the biggest one is probably the group piece, which is roughly a third of the market demand, or could be more. Again, I think these are purely estimates at this point. As I mentioned, all three providers have come up with their own sets of estimates. STR, CBRE, and PricewaterhouseCoopers. They're all relatively similar in terms of outlook. There are some changes here and there. But I think you've got a lot of factors primarily around demand, getting people back to be comfortable to be in the hotels, and then pricing power, which ties to average daily rate.
Okay, thank you for the answer.
Question, Mr. Miller, following up on that.
Councilman Tron.
Is there any correlation between when we open the hotels and the convention center that we need to fill that pipeline, because it takes a year, 2 years, 3 years, like Ms. Baker was asking, for those conventions to rebook themselves? We've created a vacuum with this, with people not knowing, and it's going to almost have to go in a correlation to what it took to fill these hotels and convention space as we started from square one. We're almost back to square one in some of this respect. Is there any correlation between that first 2 years of filling these hotels and bookings for the convention center to where we are right now?
I would say there's probably you're probably not at level zero.
No, because we got a great experience.
Yeah, you've got the hotel is well known. Cleveland is now better known as a destination for meetings. We do have, as a portion of the cancellations from 2020 have gone on the books for 2021, so that we have a decent pipeline at this point for 2021, at least on paper, and 22 and 23. So it's not quite going back to 2016 levels, because there is seemingly more on the books at this point. The key is whether these events will materialize at the numbers that we think they're going to materialize at.
Yeah, and I think to your point,
The reason for that question coming out is because if we have another oops, we might be having this same conversation in 6 months or a year from now, because that second round of oops took place. And so it's going to be putting pressure on Terry to get beds and filled up and things, it seems to me.
There's no doubt there's a risk of the second wave, if you will, is a large risk here.
The other issue you have too is that we have capacity restraints right now due to social distancing requirements. So as long as we have these social distancing requirements, Terry and her Hilton Hotel can't do the same business volume as we used to. So that social distancing is a big barrier right now to how quickly we recover.
To follow up on that question, do the social distancing requirements primarily affect how many people can attend events and banquets and such things, and it does not very much affect how many rooms you can fill? Is that correct?
Yeah, that is correct. It's 300 people throughout the facility, the Hilton facility, so 300 on our 3rd floor and our 5th floor. Both ballrooms can seat 300 people at the 6 feet social distancing requirements, so we're in good shape. I think the upside there is that we're one of the few hotels that can put 300 people, which is the current amount, into our ballroom with adhering to the 6 foot social distancing, as Chad said. So There is, I'll paint the better picture. There certainly is the opportunities we have versus the other hotels in Cleveland because we do have larger ballrooms. So we feel good about that. And Jack, to your point, it is going to be a glide path. It is going to be a ramp up. And I think that's what Larry and Chad were saying. So I think similarly to what you were saying with opening, of course, we have a great base next year. We do have a good base. And we even have a good base in the fall, but it just keeps eroding. And like Larry said, you may be booking 200, but maybe only 100 people will be confident to travel. And another 100 will then meet virtually like we are today. So it's going to be a mixed level of confidence that we're going to see in the consumer, and that'll be reflected in the numbers that show up for these meetings. But we do have a significant base on the books for 21, 22, and 23 already. Confidence, people are still waiting. They haven't canceled that far out yet. These cancellations are only for this year and the beginning of next quarter. But so we still have that business that we had already on the books. It's just a matter of will it hold up? We're on pace for 21, 22, and 23. But really, will it hold up? Will consumer confidence stay strong, or will it get stronger? And what will the guidelines say? Will there be another reoccurrence or resurgence? These are all questions which will determine if the business on the books will stay in place and to what degree.
But a lot of your rooms are booked for conventions that are going to take place at the sister building right next door. And those events could be 3, 4, 5, 10,000 people coming to those events. And those are certainly way beyond the 300, unfortunately. And those are going to get killed by a trade association that's not going to bring their event and share it amongst the 3 or 4 hotels that would be there, which is the sad part about that. I've been involved with a number of conventions that have already been shut down for the fall and into the spring and already into the spring.
That's correct. Just last week, we lost a big one in August. I mean, they are hanging on to my point. They are hanging on to the last minute to see if the guidelines change, if people's confidence is better. We have one large convention left in August, but we don't, until it changes over 300, which it doesn't appear that it will at this point, that will also cancel. So this is a really an exercise in rigor and focus and rebooking and analyzing what the governors are saying. And it's a combination of things you can see.
Mr. Chairman.
Yes.
Thank you, Mr. Chairman. Thank you, everybody, for being here today. So it sounds to me what you folks are saying is, I mean, this is really touch and go. But I mean, is it fair to say, based on Councilwoman Baker's question, that these projections are premised on the fact that we don't have a vaccine right now, and that's kind of where we're at?
Yes, I believe we're all saying that. Yes.
Yeah. Yep.
Okay. Thank you.
Yep. There certainly is a bigger and better recovery once a vaccine, is established. Right now, they're generally assuming historical recovery based upon previous recessions and when demand typically responds and recovers after an event. And so it doesn't factor in the fact that there's going to be a vaccine, which could absolutely create much more positive demand for the hotel.
Okay. Appreciate that. Thank you.
Okay, this slide just gives a recap of the financing for the hotel. Bob Franz, are you on?
Yeah, I'm on. Can you hear me?
Yep, you want to walk through this?
Yeah, happy to. And Walter, I know you know this as well, so please.
Go ahead, Bob. I mean, but in essence, this summarizes how we get to what the request is.
Yeah. So, as Larry and Terry were talking about before, in past years, the hotel has clearly been a success, a very strong success. So in the document and in the financing plan, when everything was structured, there were predetermined numbers coming from the Hilton in terms of operating revenue. We call that a priority payment. In the chart there above, the blue numbers there, $8 million last year was made. The remaining 12.7 came from public revenues. What we call their public revenues, a portion of the 0.25% fund, tax increment financing, so TIF, as well as city and county lodging taxes on that hotel only, so just on the Hilton, not on any other hotels in the area or in the county or in the city. So in the past, everything's been going according to plan. What we're dealing with now is, for all the facts and circumstances that Larry, Chad, Terry just went through, that ratio is starting to flip. So what we have received from the hotel in terms of a priority is not the $9 million that we planned, but only 3.7. And that already came early this year. So we are required to make up the remaining 17 million approximate number just for the debt payment. So if we go down to the bottom set of numbers there, these are the two remaining payments that are still yet to be made. That, according to the documents, we, the county, are responsible for. The second half property tax payment of $1.4 million and change, and then the remaining debt payment on December 1st of just under 16 million. If you take that total of 17.4 minus what's already in the budget, it's the additional appropriation request. So we just really wanted to lay it out exactly where this came from. Not only has the Hilton produced the priority payment last year and prior years of 8 million, they've also paid property taxes from available revenues. So we feel fairly comfortable saying, and Walter, correct me if I'm wrong on this, but you feel comfortable saying we're not going to have that money by August 13th to make the property tax payment.
Correct.
So, Mr. France, to follow up on that, am I correct that in the last couple of prior years that the hotel property, the hotel priority payment plus the public revenues generated by the hotel itself have been sufficient to pay for the property tax and the debt service?
Correct.
So my question is for 2020, you said that the general fund revenues expected to be generated were 9.5 million, but instead we only received 3.7. So that means that we had a shortfall of 5.8. But instead of 5.8, we're being asked for an additional appropriation of 7.9. And so I'm wondering why is it $2.1 million more than it would appear would be required to cover the shortfall?
Mr. Mill, I think so if the Hilton were able to produce the priority payment of the 9 million, we would only be looking at the amount that we've been planning to use from the general fund of 9.5. However, the fact that the Hilton is currently, as previously discussed, accessing the operating reserve to help supplant operating dollars, we fully expect that there won't be enough money coming from the Hilton at this point for all the reasons that we've gone through to help make a dent in that $16 million that are due on December 1st.
I think there may be, Councilman Miller, I think there's some confusion here between the priority payment and the debt payment that the county generally makes. We have a $9.5 million debt payment budgeted out of our bond retirement fund. And what we're paying here is what we would have generally paid from the Hilton hotel revenue. We're still going to make the general fund payment from the bond retirement fund of $9.5 million. They're separate and distinct, but I think Bob put them together here in a combined format.
Okay, what I'm trying to understand is that you testified that in the last couple of years that the hotel revenues and the priority payment have been sufficient to cover the debt service and the property taxes. But you're saying that this year you're 5.8, we're 5.8 million short. And my question,
Yes, I think the confusion here is, so the priority payment goes just to the debt service, not to property taxes. So if there's available funds from the hotel, they also pay property taxes, which they have. In addition, they would also make the priority payment. So for example, in 2019, the hotel made an $8 million priority payment to fund debt service. In addition to that, they also funded the property tax payments.
so can you tell me in 2020, compare 2020 versus 2019, what payments are going to be different and by what amounts? I want to know what shortfalls get us to 7.9.
So the Hilton is providing 3.7 million instead of the 9. Okay. And that's the real difference, is they were able to make the first payment in the first property tax payment in 2020, and they also contributed approximately 3.7 million to the priority payment, but that's all that they're going to be able to contribute. So what's left is the second half property tax payment shown here on the table of $1,437,000, and the remaining debt payment on December 1st of approximately $16 million. So the total number coming out of the county for this is approximately 17.4 million. You take off the 9.5 million that's in the budget, that was expected. That's always been part of the payments. Leaves an additional appropriation necessary to fund the property tax payment and the debt service payment of the $7.9 million.
But you're saying I mean, this looks like that the hotel is putting up 0 in 2020. Because you have the 17.4 million that's owed and the 9.5 that's coming from the general fund budgeted debt service. And the entire 7.936 is what's asked for in the appropriation. But you said that the hotel was going to provide 3.7 million this year. Why would that not be subtracted from the 7.9?
Because that money's already been contributed and spent on the June 1st payment, on the June 1st debt service payment.
Councilman
Okay,
Oliver.
so we don't have all of 2020 in here. We
Oh, you
only
just have the second
we
half,
only
Dale.
have part of the story.
Yeah, you just
Right.
have the second half there.
What's not here is the first debt payment and the first half property tax. That's already been paid by the hotel operating revenue.
Do we have those numbers so we could actually look at the full 2020? I mean, you're only telling us half the story here, it looks like.
Do you have the number for the first debt payment that the Hilton Hotel operating revenue paid? It should
Yeah, it was,
somewhere close to $4.5 million is my number here. And I would
yeah,
guess
4.75 million.
another 1.4.
Mhm.
And I assume the
Okay,
taxes were 1.4?
Yeah.
Correct.
okay, I would like to ask you to get back to us.
Councilman,
With,
we'll provide you with a two-year comparison, 2019, 2018. I'm sorry, 2019, 2020.
Right, and that would be helpful, and I'd also like to see a projection of the expenses and the sources, what 2020 would have looked like projected if we had not had COVID-19 as opposed to what we're actually getting.
You do that.
Yeah, that would be helpful. But I get the general drift of the explanation. I know what you're saying.
Yeah, the key here is the box there is just what's remaining for 2020. Payments have already been made and this is what's left over.
Okay, fine.
Mr. Miller, can I at least chime in? Is
Yes,
it
you may.
that the 2019 was a photograph of what took place? The 2020 plan is what we anticipated without the COVID, Dale, I think is what they're saying. And so if you look at that, the Hilton was going to did contribute 8 million last year. They were planned to contribute 9 million this year. Is that correct?
Correct.
Correct.
Okay, and they have at this point contributed 3.7. Is that what we're saying?
Correct.
And they're not going to contribute another any amount from this point forward to the end of the year. Is that what you're saying also?
Right.
Correct.
So we went from a projection of 9 million to an actual of 3.7. And if last year we took the 8 million, they could cut it in half being front half of the year, second half being that they contributed almost exactly this year what they did in 2019 as far as a half year. Is that what we're saying in the 3.7?
It was actually a little, 2020 was a little more front loaded. The distribution that's been made so far was ahead of the distribution that was made for same time last year.
Well, I thought I heard you say that they've already contributed 4.75 and the front half tax of 1.4. To me, that would be almost 6 million, not 3.7.
3.7 was for the debt service. The 1.4 million property
Gotcha.
tax payment was also made as well.
Okay, so that does get you that number then pretty close. All right.
Yep.
Okay, so Dale, we got to remember that 3.7 does not include that they paid the taxes on the front half taxes.
Understood.
Thanks.
Chair, if I just,
Ms. Baker.
I'm not as familiar with Hilton Hotel, so I'm just going to ask, are we saying that in past years it's been highly successful before COVID? Just highly
Yes.
successful, does it just cover its expenses, or do we actually make a profit above and beyond what our payment responsibilities are?
Under the terms of the financing plan, the hotel's first responsibility is this blue bar, which is the priority payment, which was able to make in 2017, 2018, and 2019, and then was able to place additional funds into the operating reserve to the tune of the 4.3 million. So in each of the full fiscal years since the hotel opened, the hotel made its priority payment, funded additional reserves, and then placed funds into the operating reserve.
And the operating reserve is considered profit?
I'm sorry, you broke up there.
Is the operating reserve considered the profit that we enjoyed?
Sorry, say that again. I'm sorry.
The operating reserve, is that considered the profit?
It would be excess funds as defined in the management agreement and as defined in the financing document. So it's the profits from the hotel go first, have to make the priority payment, some capital reserves, and then the remainder goes to the operating reserve. So yes.
All right, thank you.
Mr. Chairman,
Yes,
Gallagher.
okay,
A little-
Councilman Gallagher.
Thank you, sir. A little background for our colleagues that may not have been with us in 2015, 16, when this first came up. The original cost of the hotel was $310 million. It came in at 240 after some construction finagling and downsizing a little bit. We borrowed 230 of that 240. Without this hotel and the sale of this hotel to this council and the administration at the time was the promise of a convention, which came to fruition. So we put pedal to the metal regarding the building of this and moving it forward. That was with a promise of about $180 million in return for the Republican or Democrat convention. It turned out being a Republican convention. So while I understand these concerns, that hotel at a cost of $230 million produced $188 million for Northeast Ohio. So that was the sell for us to move forward with it. So any suggestion that the hotel in any way, shape, or form was a mistake is just a mistake. It actually put us on the map with our brand new convention center. And I think those numbers, other than this, I guess we could consider an act of God, we were humming along pretty good there. And it had actually put Cleveland on the map as a mid-sized convention destination. So just a little history for our colleagues when it comes to the overall picture of the hotel. Thank you.
And I agree with my colleague immensely as far as his comments there, because we are a player now finally to be recognized because of this combination of hotel and convention center. How we come out of this thing is what's going to determine whether or not we come back and be a big player again, I really think.
I have a
Okay,
comment,
thanks,
Mr. Chair.
Thanks for those comments, and I also agree with them. Who
Mr.
else?
Chair,
Yes.
Simon?
Ms. Simon.
Thank you. First of all, I agree with my colleagues that just as a further back in the history, when the new government formed, we had no indication that we could succeed with the convention center that we inherited. We inherited in a convention center without a hotel. So it was incumbent upon us to make sure that the convention center would succeed, and we needed the hotel. So I think we've done a great job in putting us on the map. And so we have to do what we have to do to float this. But the question I have is, you know, if we don't, we're appropriating this money as an emergency, but we're watching these books on a regular basis. And if for some reason things change, then we don't have to spend this money. So we're monitoring it. And it's not as if, you know, this is a debt, we're inevitably going to have to spend this necessarily, but we can see if we're going to use it or not, right? If there's some, you know, miracle vaccine next week, which is highly, you know, it's doubtful. So that's the point I'm making. Can you confirm that?
I think we can confirm that. We're going to watch revenue as it goes throughout the year, and as if things improve, you know, the money will be appropriate. If not necessary, we won't use it. The payment's not due till December, the debt service payment.
That's right. Thank you, Mr. Chair. So it's not as if we vote today and support this, that it's just a horse out of the gate. We'll be able to watch this, and if we need it, we'll use it and look at the books and keep an eye on things and monitor it. And I hope we can come back to this committee perhaps on a monthly basis to see about just watching where we are.
Okay, yes, I think it makes sense for us to monitor to the hotel on a regular basis, especially during these difficult conditions. And I would like to thank all of the presenters. I appreciate everybody willing to come and take the time to go over this with us in detail. I would point out to everybody on the committee that that there is nothing to vote on today. What we received, and this is a typical process, when an item is pulled from the fiscal agenda, we hear it in committee, and if there's a sense that the committee has had their questions answered and we're satisfied, well, then the administration will include the item in the next fiscal agenda and will have the opportunity to vote on it then. So at this point, I would like to ask if any of my colleagues have any further questions on this matter before we move on to the second item on our agenda.
Mr. Chairman?
Yes, Council
Councilman
President.
Miller, Cornell Jones.
Okay, we have the Council President first and the Vice President following close behind.
Thank you. Mr. Chairman, I just wanted to thank you for conducting this hearing, and I want to thank the members for their participation and all the folks that came in to help explain what quite a few of us have lived through. I believe that we have quite a bit of clarity here that maybe wasn't the case with some people. There's always more questions to be asked, but I think this has been a very successful hearing, and I want to thank you for conducting it and the other members for participating in it at the level they did.
Thank you very much, Mr. President, and Council Vice President Jones is next.
Thank you, Mr. Chair. My question or comment more is along the lines of the fact that I've heard from the community. We know this hotel belongs to the county, and this is our contractual responsibility to make these payments. But many times the community still has questions and concerns and desires and opportunity to weigh in. So one, I'm glad you did pull this so the community knows you did pull this out for this discussion. My question, and I was not here at the beginning of the meeting, actually speaking to constituents, but my question is, was there any consideration around possibly restructuring the debt? And I apologize if this question was answered earlier in the committee, but was there ever any consideration around restructuring the debt and the payment just in light of the COVID-19?
I think, thank you for that question. That sounds like a question for Mr. France. Is there, the interest rates are very low. There's a lot of refinancing going on. Is there any practicality for doing something like that in this case?
Thank you. And it's a very, topical question. Interest rates are very low. There's no question there. However, in this case, it would be difficult and not economically viable. And why I say that is if you compare kind of your typical home mortgage theory of you can refinance whenever you want, however many times you want, whenever you want. You just take advantage of the lower interest rate. You have a lower payment. There's your savings. In this case, and with all cases, well, I never want to say all, with probably 95 to 99% of municipal bond issues and municipal debt offerings out there, there is a call option that's associated with the issue, meaning everything happening before that is non-callable, or you can't take that away from investors and pay a different rate. And everything after that call date, you can. But unless rates are so low and different rates are at different levels, and it gets a little bit complicated, but that call date for these bonds is June 1, 2024, meaning everything that is maturing after that, which is approximately $152 million, we have to wait until 2024 to take those away from investors and give them something lower, thereby creating savings for the county. So there's a lot there. So we have to factor that in. We have to factor in the investor sentiment of what the sentiment really of hotel offerings in this market. Investors are very intelligent, as you are undoubtedly aware. And everything that Terry, Larry, and Chad went through, they're also very aware. So there's not a lot of investors out there that are investing in hotels in an offering like this. So there's a couple of different moving parts to this, but in the end, it would be a very difficult situation to execute for the benefit of the county.
I heard that I may need a little more clarification. How does the county, if we were to refinance, and that's probably the question, are you saying it's not possible to refinance? Are you saying it's not possible to refinance because of the environment?
I would say it's never impossible to refinance. I would just say in a typical refinancing situation, it would be very difficult to create savings for the county in this case.
How would the county help me to understand or clarify if they were to refinance and lower that monthly debt payment? What is the greater negative to lowering our monthly payment throughout this crisis?
You were breaking up there, Councilman Jones, but I believe if we could do it and have savings, I don't think there would be any negative.
I'm sorry, I'll say it again. What is the great lowering that monthly payment of not monthly, but the payment of $7.9 million? If we lower it, what I heard from your original answer is that might not be the best thing to do. I just want to understand, if that's the case, what is the negative dollar payment to a lower amount? Again, I just community that's looking to us to spend dollars to help get as well best of.
I'm sorry.
All of our needs. We have a limited amount of. There are many who would not want us to. Okay. There are many who would want us to not do this, but it is our contractual agreement. The question then for me becomes: is there a way to meet our needs, but maybe lessen the hit to the county? And refinancing to me seems like an option. But I would like to hear from someone to say, hey, lowering the monthly payment certainly is an option, but there's a greater negative to doing that. And if there is a greater negative, I'd like to know what it is.
So, Mr. France, do we have penalties that we would have to pay if we do this before the call date that would cancel out what we would save from lowering the monthly payment?
It's not a penalty like a prepayment penalty, but essentially, if you do the refinancing today, you would have to borrow not only the amount to pay the investors back of the principal, but all the interest that they're due until the call date. So, meaning the closer to the call date you get, the less you have to borrow to execute the refinancing.
So if we were to get closer to the call date and interest rates were to remain low or to become low again, it would at that point be more advantageous than it would be today.
Correct.
Yes. Okay.
Councilman Miller, if I could add
Chairman?
too, Mike Chambers here. As you know, we just got through refinancing some of our 2010 bonds earlier this year. We are right now in the process of looking at our medical mark bonds. So we are attacking the most attractive, the most, I like to say, the most benefit to the county right now. And once that's done, we're going to keep looking at our portfolio. So we are addressing the needs of the debt, and we are trying to take advantage of all this market and the low rates right now.
Okay. Vice President Jones, do you have anything further?
Yes, I did not catch who was speaking.
Mike
Who
Chambers.
made Mike? Mike, as you look to address it, have you looked to address it in terms of the hotel as well? Have you entertained the idea I presented of low service on?
I know you're broken up a little bit. I assure you, we're looking at the best opportunity for us to save money. We're going through every one of our debt services right now. And as Bob kind of indicated, the hotel is not the most attractive one at this time. The MedMart one is the next one coming to us. I believe it's 230 million, if I got the right amount. But that's what we're coming up real soon with you guys before council.
So maybe, Mike, you can answer my question. Do you think paying $7.9 million of debt service is more attractive than considering refinancing?
If I knew for sure we could lessen that 7.9 million, we would certainly take advantage of it. But right now, the one we're focusing on is going to save us a couple of $1 million a year. The opportunity with the one we're looking at, I believe, is greater. And Bob, you can correct me if I'm wrong. That's why we're focusing on the medical mart ones right now.
Okay. All right.
Yeah,
Thank
correct.
Yeah.
Mr. Chairman,
Yes.
at least if I think the questions are coming through. It's not quite the same as by refinancing our houses, because the people who bought these notes had an expectation that they could receive their principal payments over this period of time. And if we cut them short on that, we have an obligation to make those payments and the interest back to them. And that's why I think you're suggesting this is not what to be doing, whereas opposed to the other ones you're looking at already have a shorter life cycle on them versus this one. Is that correct, Bob?
That's a correct statement.
Okay, but that doesn't mean that the value of this property has not diminished to the point where we are taking money out of one pocket as the county and putting it into our other pocket because of the taxes. If this property is worth less today because of the way that they can't bring customers in and they can't bring all of the other business that Terry has been doing, but she can't do it today, theoretically, if we were to price this out, maybe the tax obligation for now could come out lower than what we're currently paying. And what we're doing is, in this particular situation, we're funding this tax money and then we're giving it back to ourselves, if I'm understanding it correctly. And that would be one place where you could lower the obligation. It just means also the money doesn't come into our tax revenue, but we're only just taking it from generating this money, this 7.9, and taking it from one pocket and putting over the other. Do you think?
That has been discussed.
Do we think the property is worth the same today as it would have been with the COVID virus and not being able to get people in there, not being able to have events larger than 10 people for the last 4 or 5 months? It cannot be generating the same kind of income as it was, and we know that. So therefore, income producing does affect valuation.
I will address, I know that Larry and the team is looking at that, Councilman Sharon.
Okay, good, because I believe that we could actually save probably $400,000 to $500,000 every 6 months, which could generate up to $1 million of savings in just the taxes alone in the valuation, I believe.
Okay, do we have anything else on this subject? Okay, hearing none, I would like to thank everybody for the presentations, and I look forward to you're sending us the full year-over-year comparisons and the 2020 model of what we would have looked like without COVID-19. In the meantime, I believe that the administration can go ahead and bring this item back for our consideration in a future fiscal agenda at your convenience. So that'll complete the hearing on the Hilton Hotel item, and we will go on to the next item, which is the update on the Harris property tax IT system. Presenting will be Mike Chambers and/or Andy Moles. And just by way of background for everybody on the committee, we held our last update on this project on May the 18th, and they informed us that they had gotten a favorable response on their request that a number of positive changes be made by the end of the first quarter, and they made progress on testing the various things that needed to be tested and went over that with us item by item. And so now what I would be looking for specifically is to get an update on exactly what progress we have made in the last 6 weeks or so since the last update, and whether we're still on track with the schedule that we had in mind at that time.
I'm going to share my screen and then pull up a little presentation here. Give me 1 second.
And Michael, we have not yet seen this, so after the meeting, could you send it to the clerk so it could be distributed to all members?
Yes, I will.
Thank you.
How do you do your computer here, big fella?
Want to go in there and help them?
I guess. Should be screen. Or
Chair, I believe we do have this PowerPoint. It was sent to us, Trevor.
on my computer though. Yeah.
That's correct, Nan. I sent it out a little bit ago.
Yeah,
Okay.
I'm looking at it.
I apologize. It's there's a couple small corrections on it, but I'll note that when we get there. I'm good, Andy. Thanks. Okay, hopefully you can see it right now. Are we good?
Yes.
Okay, sorry. I got Andy joining me at this time. This is just a recap of the last, the contracts that we have. Basically, we view them as one project, but there's really 3 different components of it. the license agreement, the support and maintenance, the software implementation, and the total contracts are valued at $10,755,000. Within that, there is a contingency, move this out of my way, of about $626,000 for change orders, and I'll address that in a couple slides over. I do want to note at the bottom here that all 3 contracts expire in September, and we're working right now to move forward with that and extend that. Once again, this is just a different view of the contracts. We have the tax system, the CAMA system, and within each of them, there's maintenance and implementation costs. The total is $10 million. We have 1 invoice pending right now. We just paid this period $89,800. I gotta get rid of that guy. There we go. So paid to date is $6,054,000. The balance is $4,341,000. And as you can see, the first change order was, it's being on pending review right now, and we just described, I'm sorry, we'll describe the next one in the next slide here. So the county budgeted $626,000 in the overall $10 million number, of which a total of about $308,000 has been authorized. So you got about a little over $315,000 that's still unauthorized and available, and if we don't use it, we won't. The most recent change order paid was for $89,000, and it was authorized and it was delivered, and that's the reason why we paid for it. It had to deal with transfer credits, our on-base integration. As you know, at the time, they weren't sure whether we go with on-base or not, and it did not specify the system. And we now know that on-base is our document management system, so we had to go ahead and do that integration. In addition, there was the transfer and conveyance. We requested enhancements, and this was a total of $65,000. It was overall to make the system easier for both staff and the taxpayers. And the only other one we have on here is this $48,000 change order that's pending. And that was to, as you all know, we at the time that we sold this, we had Famous, and now we have Infor. So this is now to make sure that we can interface with Infor. We have not paid this yet. We're still reviewing it and making sure everything is going well. So an overall breakdown just for you of the change orders, because I know this is important. These are all of the, I want to also let you know I have some of my team members on the phone and in the Zoom. I got Lisa Rocco, Debbie Dapovich, Joanne Jackson, and I believe Jonathan from Law might be sitting in as well. But over the course of the years, these change orders have all been authorized. You can see what was been invoiced, $156,000, and what was paid is $108,000. So the big difference is this one for $48,000. Project cost, staffing cost to date, and I know we had talked about this the last time, is, you know, what have we been spending? As you can see, back in 2016, when the project started, we actually allocated staff, and I believe we hired a few different people, but we took some of the existing workers and allocated them to the project. Overall, it was about $320,000 in 16. In 17, it was $508,000, because 16 is kind of lower because at the time of year that it was, as you can see, it was April. 17 was $508,000, 18, $492, 19 was $515,000. And we're anticipating spending approximately $551,000 this year. Notice part of that includes funding some vacancies of $63,000. So if we're able to bring some people in by September, this is about 3 months worth of salaries for the people we have listed right here that we're really trying very hard to get. I know Andy is working hard to try and fill these positions as well. In 2019, we had a contractor that was on board. In December, the contract expired, and we paid the final balances in 2020. But this expense now will not be here moving forward. So as reported, you know, our last period, we were focusing on testing, and during the past month, we've tested over 334 cases. 73 open issues were resolved. And basically on June 16th, as you can see here, Harris did deliver updates and fixes to the building. We did a complete refresh, as you know, earlier in this year. I believe, and my team will help correct me if I'm wrong, I think this is the third time that we did a refresh. And as noted here, we have to continue to run these processes over and over and over again just to make sure that we have accuracy. And then once the functional testing is complete, user acceptance begins, and then we continue moving forward on that. So since we last talked, the bottom line of this slide is we've had over 300 test cases were completed and 73 issues were resolved. As I mentioned to you, the project reset began, here it is, October of 2019, which once again, and this is where we indicated to you the last time we spoke that we really believe that we've made a tremendous amount of progress in meeting and getting this thing up and running. Up until this point, I know the morale of the team was very low. They didn't think that the project was going to move forward in time and or, you know, the way we wanted. We just didn't want to have a system. We wanted to make sure we had a system that we were proud of and that met all of our functionality requirements. It was over these last few months that, you know, Harris, they got a new project manager, and they've dedicated a tremendous amount of resources to getting this up and running to the point where we're at now, where our staff, and as I showed you last time, the user experience was good. We'll go through some of that here in a minute. But the key thing is the reset happened in October of 19. Harris, the amount of time for them to complete the training on the models ran through June of 2020. This is where we're getting into a little bit of, and I'll talk in more detail in the slides to come. To keep a January 2020 deadline, we would have to complete all functional testing in 1 month. And then we would have to really decrease our time frame for user acceptance, system integration, final acceptance, and end user training. In addition, some of the functional testing was blocked, and which ended up happening was they delivered they fixed some of those things, but it required our staff, the same staff, to go back and look at what was fixed, as well as look at the tax bill creation. So bottom line is we had same resources, both testing the process and creating production of tax bills. So that created a delay. Overall, you know, due to the risk of decreased testing, the proposed go live date, we have to move it. So here's what we're looking at right now. This is the updated schedule. Believe me, I'm not happy to tell you this, but we have to move this timeline. If you look down here, we're responsible for calculating 2.5 billion in property taxes. The total market value is 107 billion. 25 billion of that is the tax value. We can't rush this thing. And right now, there is no way we can make that deadline with everything going on. This has now become the revised schedule. We're looking to go live in October of 2021. I looked at this hard. There was no way we could meet and get everything done in order to get live for January of 2021. As you can see now, we're doing the functional testing is what I was talking about earlier. That's going to run until September. User acceptance, whoops, I apologize. That's going to take us till the end of the year. Then the integration, the final bug fixes, end user training, and then finally go live. So I'm going to stop here for a second. I know that's a lot of information, and I want to see if you have any questions right now before I go on.
Okay, please proceed. We can always come back to this if there's questions.
Okay. So this is going back to, you know, this is a repeat of what you've seen before, but this has been updated to include all the additional tests that were conducted. As I indicated before, this is what we were looking for, the good. Previous to, I would say, March, you know, we weren't really getting this information. This was not good. This was, you know, poor. So you can see these are just updates of the, this happens to be the functional area for the tax bill dependencies. What I really want to point out, and the real reason why we have to push this, is if you look here, 21% passed. If we move on to the next one, which is the functional area for the tax bill creation, things are progressing good, as you can see, but 0 has passed. The next part is the functional area for treasury. Good, fair. We still have items here that has not been completed. And if I look here, we've only got 13% passed. We move on to the next one, it's the post collection. Once again, we have a bunch of items still open, and you look here, we're only at 2% passed. Functional area by parcel maintenance. The user experience is very good. We're at 34% passed. And this is the other category. Once again, this is where we need some improvement on, and we're not, it's fair at this point in time, but we're at 15% passed. So my point of showing these, if you look at your previous slide deck that we sent you, these numbers have changed, and what was passed, what was blocked, what was retested, all of these categories. I went through them kind of quick, but I was just wanting to focus on, this area here, that 15%, this 34%, the 2%. To go live in January of 2021 is just not going to happen. And that's the reality of the schedule. So in working both now with, as you know, with Harris, working with our project team, knowing that we have a contract that expires in September, at the end of August, this is our timeline. And that's why, in working with Jonathan, we have the opportunity now to, within this amendment for extension of time, to include a couple additional, we like to call it milestones, so that we can hopefully meet and make sure we meet this deadline. Joanne or Debbie, do you have anything to add? Lisa? I'll take that as a no. Once again, I will indicate, even though we're pushing this, we believe, the team believes, I believe now at this point in time, that not only will we have a system, but we'll also have a system that I think will stand up to time. As you know, the current system is really, it's still functioning, but it's getting harder and harder. And the software, if I'm not mistaken, is not going to be supported too much longer. Or?
No, it should be still supported.
Still supported? Okay, because that's right. It's the Harris project. Yeah. As you know, Harris bought our current system. The maintenance, they're the ones that are now responsible for that current system that we have as well. So with that's what I wanted to update you on at this point in time. I just wanted the big thing out of here is that the go live schedule, we believe that this is achievable. And I'll answer any questions you have.
Okay, I have a few questions, but I'm going to defer to my colleagues first and see who has questions. And then if my questions are not answered, I will chime in. So who has questions?
Chairman?
I'll ask a question, Chair.
I heard Jack Schwan first by a hair and then Baker.
Thank you.
And he doesn't have very many hairs. Trust me, that was a very considerate thing to say. There's not much up there. How many customers does Harris have of this product? Outside
Well, this
the county?
Well, they've bought our current system now, but out of right now, we're the only one.
Okay,
in
so
Ohio.
we are the guinea pig. And what are they offering us for this? Because some of this delay belongs on their shoulders also, does it not?
Yeah, remember too, I'll go back to, a formal RFP was done and then they were evaluated. It's not like there's a large market of people that do this, Councilman. So throughout the RFP, they did score the best out of that, and that's why they went with them back in 2016. We are the first one in Ohio. I know each state has little different nuances and stuff like that, but obviously with Ohio, I think that, Cuyahoga County, we are the first one, but I want to remind you that we are the one that was selected via an RFP.
And we paid 2 years of maintenance simultaneously with paying for the continuation of the old product, did we not?
Yes, and we discussed that before. That
I know we
per the
did. That's why
contract- Yeah.
we're now extending this another year way past where we were. And I understand you're telling us it can't be done any other way. What is Harris doing to help defer our cost in regards to this?
So once again, as I indicated, we're getting ready to amend the contract, and I have Jonathan on the phone. I'm not going to discuss in a public meeting what we're going to try and put into that contract, but obviously at the request of a memo we sent back last year, they did stop the maintenance charges going forward. So we know that, but as you indicated, we do have maintenance on our legacy system. So that'll be a discussion that we will have.
Yeah, because they're owning both ends of the equation. So it's no skin off their nose as to where they get the maintenance on. And the fact that we're delaying and this is causing us, this has to cost us internal money also in regards to this too.
Well, that's why I had that one slide with the team for the last few years on there. Yes.
Right. And so I am highly encouraging you to push the pedal to the metal in these negotiations because they need us every bit as much as we need them. They need us to be their poster child for this product when they go out and present it to the other 87 counties. So
they know that.
Yeah, I just want you to work your magic on getting a much better number and getting some consideration and perhaps even getting waiver of maintenance fees for years coming forward in exchange for what we've already done. We've already paid double maintenance already, I believe, for at least 2 years. Not to mention the fact that we would love to have that money in our pocket right now with the conversation we just finished up a few minutes ago. That money would be nice as sitting in our bank account versus theirs. Thank you.
Sure.
Ms. Baker is next.
Thank you, Chair. Just a question on the timeline we are now going to be accepting in October. There were 334 cases that were tested and 73 open issues that were resolved. That means there's still 261 cases we need to overcome. Is that correct?
Yeah, going back in the slide, that's correct. But there's still tremendous ways to go. There's no doubt about it. Yes.
Okay, so our experience with ERP, it seems to be when we have a long-term drop dead date, as we get through on-switching date, that tends to change, especially when we have so many unresolved issues. How confident are you in what's left to resolve that you can meet that deadline by October 1st, which is 10 months out from January, which was our initial date, and really how many months out from now? Can you foresee that far into the future that you should be able to overcome the issues that you've outlined before us and have it up and running by October with high confidence?
I got off the phone this morning with the vice president of Harris as well, and two reasons I called him. One was to confirm that his dedication to the project, letting him know that we have this amendment coming up, and he assured us that they are 100% committed to finishing this project because obviously, as Mr. Councilman Schron indicated, there's a lot for them as well. So the number one reason why I will say yes to your question is because back in, I think it was January, they fired one of the project managers or reallocated them somewhere else. They brought in somebody who has done this several times before. And that's why our experience and the team's experience has really increased immensely. Since then, as you can indicate it, and then one slide, I forget how many bugs that were fixed, but as you test things, there's bugs that come up and those have to get fixed before you keep testing. But the interaction between the Harris team and our team has gone from pretty much, non-existent, I don't want to say non-existent, but has increased very well. And our relationship is very good right now.
Okay. I guess I would ask Chair, we periodic updates as we work through this to see if there's anything unforeseen and no surprises as we get closer to third quarter of the year, first quarter, second quarter, and finally third quarter of having it completed.
Ms.
Just a little gun shy when we start thinking about extended deadline.
Ms. Baker, it's been only 6 weeks since our last update, and I guarantee you that I'm going to continue to have updates on this project on a regular basis until we get it done. So I very much appreciate your support for doing that.
And if I can add to,
Appreciate you doing that.
if I can add to that too, that's why we have these slides here where you'll see when they'll start saying 100%, 90%, I mean, that's when, I mean, that's why we put these in here.
Okay.
So
Thank you.
So a couple of other questions. Is it our intent that all the items that where the user experience is rated as fair, that we're going to get all these up to at least good before we consider ourselves done?
Absolutely. And, you know, I will point out on this slide here, we got 93 pass, block, retest, failed. Sometimes that user experience is there was a bug that had to get fixed. And as they fix the bugs, the experience will improve. So yes, without a doubt, we want to be proud of it. And I don't, you know, I'd like to see all goods at a minimum.
And how much will the cost of operating the new Harris system compare with the cost for normal operating maintenance for the current system? Is it more or less or about the same?
Well, I will at least tell you with the staffing here, I would hope that, you know, the budget going forward will, you know, if we were able to place these people full time, you know, you can do the math. We'll add another 200,000. So we'll be fully staffed as far as personnel. The maintenance cost, I don't know. I don't have a number on that yet, what it will be annually. But as Councilman Schron indicated, that could be something that we could discuss.
And the final question that I have is that we have an October 4th, 2021 go live date, and the intention is to go live and generate the tax bills for payment in January.
Yes.
And my question is October 4th the latest date that we could go live and still have those tax bills issued for the January payment, or is there a little bit of play and it could be another couple weeks and we could still make the January round of tax bills?
I think we might have a week or two, but we have to start, you know, the whole thing is we have to run the system. We're going to import everything in the legacy system over, and then we have to create the tax bills in the new system. And that, you know, we have to get all that done. It's not like it's a very complicated issue, but yeah, I think we might have a week or two, but not much more than that.
But not much. We're going to have to come very close to the 10/4/21 date, or then otherwise we're basically going to be looking at a 6-month delay. Would that be a fair statement?
I don't want to say that. I mean, I want to get it done right here, like we talked about, October. I don't want to think about 6 months, but yes, we have to get it done.
Okay, so we got to get it done in early October in order to be ready for the following January.
And based on the team and based on Harris, we believe that this schedule is going to get us there.
Okay, any other questions by my colleagues?
I have a question, Mr. Chair, Sonny.
Yes, Simon.
Is there anything in the contract we have with Harris that would penalize them for these delays? It sounds to me like they were contributory in this delay. You talked about an employee or it got moved, and, you know, do they have any responsibility for any costs associated with these delays?
The way the contract is, and my team's on the phone as well, is that we pay upon, completion when we get it. So if it's not complete, we're not paying for it. So what I'd like to do is, and without getting too much into the public forum here, is maybe put some factors in the amendment that we can, at least try and make sure we get there. So right now, if we don't get it, we don't, if they don't deliver it, we don't pay for it. So theoretically, when I come back with this timeline extension, it's just going to be for time only, and hopefully I could put, some additional things in there, working with Jonathan from law.
Mr. Chair.
Yes, Ms. Simon.
Yeah, I agree. I mean, we need to start putting these, forceful clauses in these contracts, because this is like the ERP, we just keep, getting behind and paying the price, taxpayers. And it doesn't appear to me that, the contractors with, are bearing their end of the responsibility. We need to have these clauses in here with some penalty if we don't meet these deadlines. It's not just all on the county.
Yeah, I will, I'd be remiss too if I didn't say, that the county did have some turnover as well. But once again, there was, I think, 3 complete restarts. I can't go back to what happened prior to me, but I think since we've gotten involved, and especially with Harris, since they got that new project manager, we believe we're there. Now, if I start losing team members, it's like anything else. It will hurt us It will hurt us. But I think we have some time built in here to absorb that. I've got a good team, and I know they'll stick with me till the end.
So I would like to make a preliminary request, but I think the final determination would be up to the council president. But I'm thinking that even though there may not be any additional money, and certainly hopefully not 500,000, because of the importance of the contract, I would like to see the contract amendment come to the full council for consideration, and not just to the Board of Control. So I'm going to put that out there for consideration, and the council president can work with the administration on that.
Okay, we'll get it. We'll have to get it a little quicker though. Sure. Okay, no problem.
Anything else by my colleagues? Okay, well, we thank you very much for the presentation. It's not good news, but it's very good information. We have a good picture of where we are, and it's clear that while not positive, we have made some progress in the intervening time, and so that's good to hear. Moving on to miscellaneous business. The one item that I would have is that I would just like to make my colleagues aware that our intention is that on Monday, July the 27th at 1 o'clock, which is one of our regular time slots, we're going to have our next update on the ERP system. And then on the following Thursday at 1 o'clock, we would have the committee of the whole update with our consultant Sigbursons. So please put those items on your schedules. Is there any other miscellaneous business? Hearing none, there being nothing further that commands our attention, the Finance and Budgeting Committee is adjourned. Thanks, everybody, for your time and attention.
Thank you.